Welcome back to the ETF Inspector. It's Saturday, November 1st, 3:30 in the afternoon, and this is our week look ahead and payment guesstimate video for the $1 Billion Club. That's YieldMax's 4 individual income funds with assets under management of $1 billion or more: Coney, Misti, NVDY, and TSLY. All right, before we get into it, I'm on X at ETF_Inspector1. Follow me for posts related to these videos and these ETFs that I cover. If you missed it, there were 2 new high income funds that got released on Friday: KYLD from Curve and ULTI from Rex Shares. And we did do a Spaces talk this morning. If you're on X, you can go back and listen to it. Ambassador of CONY will be the one who posted it, and he hosted it right there. And you can go back and listen to the replay. And the nice thing was Howard Chan of Curve Investment actually joined us, so he was able to give a much better description than we would have. And he also fielded questions from us about the fund. So that just happened this morning. There's already been 800 plus people that have listened to it, almost 2 hours long. So lots of good information if you're interested in another high yield ETF. All right, let's go ahead and start looking at our funds and their underlyings. So Coney, over the course of the week, did end up down about 4.37%. We do have to remember that a portion of that from the Wednesday close into the Thursday open is the distribution, not necessarily a loss, but in any case, it was down on the course of the week. Misti was as well, down 9.5%. That's ugly. Nvidia, not so much. They were up, even with paying a distribution, still up 3.66%. So they were actually performing even better than that, given that they're able to pay out and continue to move up. And finally, TSLY, a rough way to do it, but ended up 1.37% to the positive, even with paying out their distribution for the week. We'll probably come back to these charts a little bit in the video. So we'll just start off with Coney and Coin. All right, over the course of the week, they made trades on Monday, Tuesday, Thursday, and Friday, bringing in a credit of $9.2 million on Monday, another $1.2 on Tuesday. Then they had a debit on their trading Thursday of $1.5 million, and they finished off the week with an $8.5 million credit on their trading. All right, so totaling that all up, it came to $17.5 million. If we were to divide that between the 200 million plus shares, it would come out to 8.74 cents per share. All right, so that's income wise. That is the goal on how to do it. So if they make enough to pay based on the income, then that'll be the case. Otherwise, we look somewhere else, and that's the IV. I like to use Market Chameleon. Now they are using a shorter time period, right? The weekly implied volatility. That's much harder to have easy access to. We can get it. We'd have to look up within our trading account everything. But just to get us in the ballpark, I use Market Chameleon. Type in your ticker, and you'll get the 30-day IV updated by the day. So their IV implied volatility is what that is. Decreased slightly from last week to 60.7%. Last week, they paid 13.45 cents per share. That is a over 110% annualized distribution. Now, that's a moving number because that's not just a fixed thing. That's based off of the share price. So as the share price drops, it would make this look like a higher annualized yield. I think they were over 100, but I don't think they were 110 at the time of the announcement. So given that information, again, we looked at Coney over the course of the week. They were down. They made enough to pay 8.74. Last week they paid 13.5. So what is my estimate? On this one, I went ahead and went right with what the income was. So it's definitely going to not be as high as last week. My guess, I'm saying. I could get this completely wrong. But I'm going to give them a guess of 8.74% or 8.74 cents. Let's just plug that in real quick over here, and that'll show us what that would come out to annualized. It's over 70% with a 30-day IV of 60%. So I think it's going to be, I don't think we're going to be anywhere close to that 13 cents from last week, but we will see. All right, when we take a look now at the holdings, they've got synthetic 300 and a synthetic 390, the first for November 21st, the other for December 19th. As you can see, 17,000 contracts at one, 19,000 at the other. 300 is in the money and worth about $78 million to close if they closed it out, which is about 39 cents a share. The second is underwater or out of the money, and it would cost about $84 million to close out. So they're actually fairly similar, almost offsetting. So they're not really going to play too much into helping with our guesstimate. When we scroll down, as with all of these funds, the large majority of the money sits in treasuries, cash, and government obligation funds. That's because to create these synthetics, even though it represents a large amount of money, they are almost free to start if you, depending on the strike price, to sell a put and buy a call at the exact same strike price could basically break even or come very close to it. But you're still going to need a whole lot of money to represent that in the event it goes like this one and drops to the point of needing $84 million to close it out. So that's going to be why your money's going to sit over there in treasuries. And the nice thing is that actually earns a percentage too. Not all of them show it, but this one shows 3.875%. Okay, these are now updated for the week ahead. So all expiring on Friday, November 7th. They've got calls sold anywhere from $357.50 through $370, going by a $5 increment on the first, then another $250, then another $5. And so they have now sold 100%, as you can see here, of the amount of calls that they possibly could. So the possible total would be the combination of these two quantities for the synthetics, and that's going to equal up to how many they sold. And they have also bought calls or turned these into, they're basically call spreads. So looking at a $20 spread, $20 spread, 20. So they're selling $20 call spreads on all of these. Closest to the money strike is 3.99% out, and the furthest is 7.63%. So with coin closing on Friday at 343.78, 357.50 is the closest one. So that just means that if, let's say, coin goes up 3 to 4% this week, we're going to be able to capture that in our share price increasing without ending up having to pay a bunch of money to close out these calls. But 16,000 is just a percentage, a larger percentage, close to half of the total amount. So we'll just see how that works out throughout the week. There's $1.2 billion in assets under management. On Friday, people sold out of the fund. You see a whole lot of movements in and out of these, so I've got a feeling a lot of people buy them to collect the distribution and then turn around and sell them and then wait for the next announcement. But 825,000 shares came off, bringing the outstanding shares down to 200,550,000, making the NAV, which is basically what one share is worth, 633, and it was trading at 634, so obviously very close. All right, we will find out how close my guesstimate is on 11/5, Wednesday the 5th of November, 4 days from now. Next, we go to Misti. I believe, let's see, they traded on Monday, losing 168 million. Tuesday, losing 5 million. Wednesday, bringing in 7.9 million. Thursday, bringing in 6.8 million. And Friday losing 211 million. So what was happening there on those large down days was closing out of synthetic combinations that were way out of the money, in the money, however you want to call it. They were underwater. We'll say it that way. So if you sold the put and bought the call and then the share price dropped, then you're going to have to pay a lot to close it out. That was the case. So they're adjusting their synthetics and taking that loss. So when we total those all up, that's a negative 370 million on the week. So everybody get out your checkbook. We need to write them $1.32 per share check to pay the distribution. Obviously, that's not going to work. They're not paying a negative. So next, they tell us to go look at the implied volatility of the fund. So when we take a look at that, it did increase from last week up to 61.1%. So last week's payment was 19.24 cents per share. Again, I don't think it wasn't 91 when they announced it, but the share price of Misti dropped throughout the week. But so in any case, I don't think we're going to be getting anywhere near 19 because that would be like a 91% annualized yield. And with a losing money week, they tell us to look at the IV. So guesstimate that I made for that comes out to, I said 13 cents. All right. And again, so our synthetic, even though we cashed out the synthetic that cost us a ton of money, not cashed out, we had to pay to close it out because it didn't have value. We are still sitting with two more synthetics that are very much underwater. The 11/21 330 is going to cost 296 million to close out, and the January 26th 300 is underwater as well, negative 94 million. So 13 cents, let's see if we typed it in here, would come out to be 62%. So I just rounded up. I went around 61 and then went to the next penny on that one. That's a little low. So they might, just for looks, bring it up some, but that's going to be my guesstimate for this week. So 13 cents a week. That's only, 52 cents a month. It's a good thing they switched to weekly when they did, because they were trying to hold the $1 a share per month for a while. All right, again, all the money's sitting in treasuries. All right, calls for this coming week. Now, they treat Misti a little different than the others. As you can see, first of all, they're not selling 100% of the calls that they can. So depends on the way you look at it. They're only generating income off of 78. It's usually about 80% of the possible calls that they could. So you can say, oh, they could have generated more income. The other side of it is they are leaving uncapped 22% of these synthetic combo, the shares that they represent. So in the event MSTR goes to the moon, 78% of it gets capped somewhere between 3 and 12%, but then 22%, the remaining uncapped portion, is going to move right up with it. So MSTY is not completely capped as far as following moves with MSTR strategy. Calls are sold expiring on Friday at strike prices of 277.50, 280, 282.50, 285, 287.50, 290, 297.50. Ooh, I got some colors wrong here. 302.50 and 305. And in here, in the middle here, this is a 300. That is a purchased call. So they have basically a spread on 26,732 contracts, but almost all of them, or a large percentage of them, do not have the other end of a spread. They are just sold calls. MSTR closed at 269.51. So like we said, the closest strike, 277.50, is just about 3% out of the money. And then we go all the way up to 13% out of the money on those 305s. So we've got a lot of potential to capture some upward movement this week. Absolutely. We just need the MSTR to have that upward movement like they did on Friday, moving up 5.8 and 6.2%. That was a good Friday. Okay, $3 billion in assets under management. People sold out of this fund as well on Friday, 2 278,550,000 shares came off the outstanding shares, bringing it to 278,550. That's 278,550,000 shares, making a share worth 1088, and MSTY closing at 1089. So they're trading right at what they're worth. All right. Well, again, we'll find out on the 5th what their declaration will be. NVIDIA's up next. They had trades on Monday bringing in 3 million, Tuesday costing 20 million. And if you don't watch the daily videos during the week, I actually go through the trades and talk about them. That's why I'm just summarizing them on the weekend. So $20 million debit on Tuesday, $138 million credit on Wednesday. That's going to be closing out of a synthetic that was very favorable for them. $21 million debit on Thursday and an $8 million debit on Friday. I like to call it debits and credits rather than profits and losses, because it's not all profit, it's not all loss, even when it's a positive or negative. So this is more just let you know overall money flowed in or money flowed out on the trading day. So that resulted in a $91 million profit or credit on the week. If we divided that up among the 109 million outstanding shares, the payment will be 83.68 cents per share. So now we got to ask ourselves, do we think that they're going to pay 83%? We look at the IV, it's 47%. Last week, they paid 18.24 cents per share. That was 56 cents. So do we think that they're going to pay multiples of that, more than 4 times, almost 5 times, 4 to 5 times as much as that? I don't think so. So what can we look at, though? While they brought that income in, how do the synthetics look moving forward? Well, we still have another one worth another $200 million that's going to get cashed out 20 days from now. So they are going to want to spread that out. They don't want to make large payments at a time, having huge swings between, say, a 15 cent and then $1 and it back and forth. So they are going to want to pay out extra for sure. And we can also assume that they've been paying out a little bit extra on this one. They did talk to us about that in the Spaces talk on Wednesdays with Wolf Financial. So they're not waiting until they cash out the synthetic, bring in 138 million, and now they're going to pay it all at once. As they see that it's doing well, they're going to use that to help bump up their payments a little bit, so you get a more of a smoothed out nice payments. So we do think it's going to be nice and high compared to last week, but just how nice do we think it's going to be? If we take a look at how the stock performed over the week, well, it did well as well. So we've got extra in the share price that we can afford to give. We've got extra from the cash. We've got extra looking at our synthetic. So I think it's going to be nice. My guess is 34. Now, before you get too upset at 34, that's a 1-week payment. So, let's see what the percentage would come out to be. I gave them over 100% annualized yield. That's why 83 or 84, whatever I said, would just be ridiculous. It'd literally be a 260% annualized yield. You're not going to see that. Okay, so this will be an over 100%er. That's my guess, but I think we got to kind of keep it under control. But I think you can expect a handful of nice ones from NVIDIA in the near future, for next few weeks. Okay, when we look at our synthetic, we did see a change from Friday. They reduced this 205 for 1121 by 1,200 contracts on each side of it. So we've got 165s and 205s worth 205 million and going to cost 8 million between the two of them. We take a look at our calls sold for the week. We'll bounce up here real quick. 100% of the possible calls. So the way I do that is I total up the quantities of the synthetic and just divide the amount of sold calls by the amount of the synthetic. So if it's 100%, then they've sold the maximum amount of calls that they can. That's the case here. Selling at 210, 212.50, and 215, at 3.7 through 6.1% out of the money. All right, so right off the bat, and a large, more than 50% are at that closest strike. So we know we've got about 3.7% of upside before we are, call it capped. These are actively managed. That's the whole thing that is nice about these. They're not going to leave it capped. If it runs up through it, they'll close them out and sell higher strikes. We've seen it week by week. All right. Nvidia closed at 202.49. Nvidia at 1674. Its NAV comes out to about 1672 when you take the 1.2 billion in assets under management and divide it by the 109,050,000 shares. And that was a decrease on Friday by 1,625,000 shares. That is everything we've got. Nvidia still has earnings coming in their future, so we're going to see higher than average implied volatility. They did increase this past week to 47, and as we grow closer to that 1119, especially the week where we're selling calls across 1119, there will be increases in the implied volatility. All right, finally we have TSLY. TSLY had no trades on Monday. On Tuesday, their trades resulted in a debit of $12.5 million. Nothing on Wednesday. Thursday, they brought in $4.3 million trading. And Friday, they brought in $8.7 million with trading for an overall week's total of $518,000. If we divided that by the 151 million shares, well, everybody would get a third of a penny. So safe to say that's not going to be the declaration on Friday. So next, we're going to take a look at some other factors. We've got synthetic combinations at 415 and 420. That's the strike price expiring November 21st. The first is worth $70 million. The second worth $44 million. So both are going well. If we take a look at the share price of the fund, they did end up at an increase, a slight increase over the course of the week. So there's a little bit of increase, not a lot that can come from that. So we're going to take a look at the 30-day IV. That increased over the past week to 54.3%. Last week they paid 11.28 cents per share, which is about a 68 to 69% annualized yield. So we kind of take all that in and come up with a guesstimate. And I think that I wrote that funny. Oops. I think it's going to be very much similar to last week's payment. I said 11.5 cents. All right, so that would be obviously close to last week's payment. It's going to be close to last week's annualized percentage. Yeah, so I don't really have a whole lot extra to say about that. The reason I'm going with something that's in the 68 to 69, well, mine's probably more like 70. Let's see. Yeah, 70% is because we do have these synthetics, not worth a ton of money, but they are worth a decent chunk. So if we spread it out over the weeks leading up to it, we're going to bump each one up. Rather than paying around 54%, we can pay closer to 70 to help distribute that in a smoothed out fashion. As you can see, most money in treasuries. Calls sold for this week are 100% of the possible calls sold. Strikes are at 460, 462.50, 467.50, and 470. If you are new here, also I didn't really point out, I only highlight the ones that are sold calls because those are the ones we're generating income off of. The ones that are not highlighted are the purchased calls, the other side of the call spread. They are kind of like call it protection against how much you could have to pay to close them out. Because if you have nothing on the top side, there's no limit to how much you could have to pay to close out the sold call. Or the other way to look at it is they are going to increase in value as the share prices go up as well. So if your call strike price gets blown through, when it's in between the sold call and the purchased call, you're missing the money in between there. But once it runs beyond it, you're open back up to being able to increase with the underlying. So these call strike prices are pretty tight. The 460 is 0.75% out of the money. So there is not much upside before we're going to have to close those out. And even the rest of them as well are 1.3, 2.4, and 2.9% out of the money. So if we had a day like Friday where Tesla went up 3.74%, every single one of our calls would be in the money instantly. So playing it tight, the benefit to that, the closer to the money you sell your calls, the more premium you generate. The downside is it's a lot quicker for them to go in the money if the stock price runs up past that strike. There's 1.2 billion in assets under management. People sold out of this one as well on Friday. 1,425,000 shares dropped off of the outstanding shares, bringing it down to just above 151 million. NAV at the start of, or NAV now current 852. Tesla ended the week at 851. So every one of them trading within 1 or 2 cents of their NAV, and that makes sense for these types of funds. You'll see regular company stocks move pretty far away from their NAVs, sometimes based on sales or profits or different assets and liabilities. These funds are basically a collection of dollars, right? If it really boils down to, it's just a collection of dollars. So you just take all those dollars, total them up, and divide them by the amount of shares, and that's what it equals. So no major players out there are ever going to let these get too far away from each other. If all of a sudden this is trading for $8 when the NAV is $8.50, well, the big fish are just going to come in and buy it up because they'll take a free 50 cents per share. All right, this was the last one. We already got through earnings for them previously. We'll find out on Wednesday what all the announcements are. So thank you for watching. Appreciate all the likes, shares, comments. You guys are all very kind and generous to me. I get lots of support in all the different types of ways. So I appreciate you guys. And I got a joke for you, dad joke I like to end the videos with, and then we'll move on with our weekend. So dad joke of the day. My neighbor showed up at 3 a.m. banging on my door. 3 a.m. Thankfully, I was still up playing my drums. All right. Have a good rest of your day, and I'll catch you in the next video.